Something's happening in Shanghai right now, something that could change the silver market forever. While most of us are winding down for the weekend, there's a crisis unfolding that's being completely ignored. The Shanghai Gold Exchange is failing to deliver physical silver. And I'm not talking about delays, I mean failure to deliver the metal. And here's why that matters to you. If you're holding any paper silver, you're about to learn a very expensive lesson. Stay with me. By the end of this video, you'll understand why the next 72 hours might be the most critical period in the silver market in decades. Here's what's happening. China has just built a wall around its silver supply. On January 1st, 2026, new export licensing requirements were implemented, cutting off the flow of refined silver to the rest of the world. Now, 11 days later, the effects are rippling through the entire market. While most traders are still focused on price fluctuations, there's a far bigger issue. The Shanghai Gold Exchange, which handles more physical silver than anywhere else, can't fulfill delivery requests, not just delays. Actual failures. What does this mean for you? Are we really witnessing a temporary blip? Or is this the beginning of a supply crisis that could impact everything from solar panels to electric cars? You won't hear this on CNBC or Bloomberg, but the story is unfolding right in front of us. Here's the cold, hard fact. On January 9th, 17.3 tons of silver vanished from the Shanghai Gold Exchange in just one day. That's not just a normal market fluctuation. That's a major red flag. And yet, the mainstream narrative tells you everything is fine. They want you to believe it's just silver finding its range after a volatile December. But here's the problem. If you look closer, you'll see something isn't adding up. There's a widening gap between the paper price and the reality on the ground. Why? Because there's less silver to go around and more people are demanding it. Notice what's missing here. The real silver isn't moving. It's all happening behind the scenes, and nobody's saying a word. Now, let's break this down further. What we're witnessing is more than a logistical hiccup. It's the start of a full-blown crisis. Think back to the 2008 financial crash, when markets couldn't deliver what they promised. This feels eerily similar. The Shanghai Gold Exchange, the heart of global silver deliveries, is unraveling. What's happening here isn't just a delay, it's a systemic breakdown. And the worst part, this isn't just affecting traders, it's impacting real-world industries. Solar panels, electric cars, the green energy transition, they all rely on silver. And right now, the metal those industries depend on is becoming scarce. The very system that's supposed to supply it is failing. What happens when this crisis deepens? It gets worse. The very thing that should reassure us, the price, is now a lie. In the last few hours, silver's price has shot up by 4.21%, reaching $80 an ounce. That sounds great, right? But here's what they're not telling you. This spike isn't driven by demand. It's driven by panic. The spread between the bid and ask prices has widened to 14 cents. In normal conditions, that spread is 5 to 7 cents. This isn't just price discovery. It's a sign of liquidity drying up. People who own physical silver are refusing to sell at these prices because they're not confident dice. They can buy it back. And that's where things take a darker turn. If the price keeps climbing, the next target is $84. But that won't be the end. Once we break $80 and hold it, it's game on. And the market will be forced to confront the reality. There just isn't enough silver to go around. Now, here's where it really starts to stack up. It's not just the price moving. The entire system is under pressure. First, we saw that massive 17.3 tons of silver drained from the Shanghai vaults on January 9th. Then, margin requirements were hiked to 20%, signaling serious concern about counterparty risk. Exchanges don't hike margins unless they're worried about defaults. And now there's the possibility of a delivery failure on a massive scale. Rumor has it an industrial buyer requested 64 tons of silver from the SGE and was only given 1 ton. That's 1.5% fulfillment. If that's true, we're not looking at a supply squeeze anymore. We're looking at a complete collapse of the delivery system. And if this trend continues, if the system can't keep up with the withdrawals, we're staring down the barrel of a market out of control. What happens if this continues? Here's where it gets real. This isn't just about traders and analysts. It's about the everyday person. If you've ever purchased a solar panel, driven an electric vehicle, or even used a product that relies on silver, this is already affecting you. Imagine being a solar panel manufacturer who's counting on the SGE to deliver the silver you need. Now, imagine they can't. The deal's off, your production line stops, and contracts with your customers get delayed. Revenue takes a hit. The entire schedule is thrown off, and that's just one example. This isn't theory. This is real people and businesses caught in a supply chain mess that's spiraling out of control. If this situation escalates, the price won't be the only thing to skyrocket. Entire industries will grind to a halt. If this feels familiar, say so in the comments. You might be seeing the start of something much bigger than we realize. This isn't just about silver shortages. This is a systemic issue that speaks to something much deeper. The leverage, the incentives, the fear, it's all stacking up. When China implemented those export restrictions on January 1st, they didn't just put up a wall. They fundamentally changed the supply dynamics of the entire global silver market. They're hoarding the metal for their own industrial needs, particularly for their booming solar and electric vehicle sectors. What's happening now isn't an accident. It's a calculated decision. China needs every ounce of silver they can get their hands on to fuel their industrial machine. And what they're doing is creating a massive supply shock that's not going away anytime soon. The mechanism that allows this to happen? Power and control over the supply chain. China holds the keys, and everyone else is now left scrambling. The more they control the supply, the more leverage they have. This isn't just about silver. It's about the future of global industry. And if you don't understand this power play, you might be missing the bigger picture. So what's next? The situation is on a knife's edge, and there are two possible paths forward. First, we could see prices explode. We're already testing $80 per ounce. And if the Shanghai Gold Exchange announces an emergency cash settlement or force majeure, we could see silver soar past $90, maybe even $100. The short squeeze potential is very real. If those leveraged positions start getting liquidated, it will send shockwaves through the market. But there's also the possibility that we see a sharp pullback first. Maybe the SGE manages to stabilize things temporarily, or perhaps we see a coordinated effort to calm the market down. If that happens, it might be a short-term shakeout before the next wave hits. What's clear is that the momentum is on the side of higher prices, and whether it happens tomorrow or next week, the reality is this: the silver market is running out of physical supply, and demand isn't going anywhere. How this plays out will have massive implications, and the next move is already starting to take shape. Here's the bottom line. The screen you're looking at is a suggestion. Physical metal is the truth. When you see the price on your trading app, remember, that's just the paper price, not the price you'll actually pay to get your hands on silver. And right now, that price is completely disconnected from reality. The system is under stress, and if you're holding paper silver, you might just find out the hard way that it's not the same as holding the real thing. This crisis in Shanghai is a signal, not just for silver, but for the entire global supply chain. And the most important question you need to ask yourself is, when the music stops, will you be holding the real metal or just an IOU? Stay vigilant, stay informed. If you want to understand the bigger picture and how this connects to broader geopolitical shifts, don't miss my next video. I'll be diving deeper into why this moment is just the beginning. Until then, make sure you know the difference between paper and metal.